or transaction driver, across the world. I said across the world, across Africa, right? Because payment in most other African countries is mobile money led or telco led, rather than in Nigeria specifically, where it is bank led, right? So once something is being driven, payment is being driven by telcos, you can expect that yes, this kind of growth will continue to happen, right? Until I believe Nigeria, for instance, liberalizes, allows telcos to drive this payment or financial inclusion, using the telco networks. I don't expect a lot to change, from the way Nigeria works, and all of that. So I think it's just the trend that we've seen across Africa, the trend that we've seen in many African countries, falling off the to a large extent the Eastern Europe in Kenya.
Awesome. So when we look at still on Airtel Africa, right? They are looking at raising an IPO in the first 4 years of mobile money's business, right? Do you think 4 years is too soon a time to project an initial public offering in that sense?
No, I don't think so. I think that what we've historically known is that companies take their time, to go public, but they are spinning out what's it called? They're spinning out their mobile money business, over the next 5 years or 4 years, and then doing an IPO specifically for that business, right? That I don't think it's too soon, because it will allow it allows the company to hit some maturity, some consistency in revenues, some balance that they require. Because by the time you get to the public, it's not going to be a question of we have strategy. No, people want to see performance. People want to see growth. People want to see consistency in revenues. People want to see maturity in the business, right? So between now and 4 years, it allows them to build all of that into the business, that they have today. So I think I don't think it's too soon. I don't think it's too far away, essentially.
Okay. But what does this say about mobile money, though, that a telco would consider spinning it off as a standalone business? So what does it say? First we heard about M-Pesa and, that part of, East Africa and everything, and how it is that it's spread and people are accepting it. But in terms of consolidating it as a business on its own, like in the telco space, that's interesting.
Yes, financial services and telecommunications are quite different, right? So I also think that it requires different thinking. Telco people started out, trying to run telecommunications. They are engineers by design. They are, they are communication experts or telco expert by design, not bankers, not finance professional, essentially. So it requires a different thinking. So all the finance professional needs here to work is the telco network, right? It's just the telco network. So once they get the telco network, they can do magic with it. So I think that's the thinking. So that let's focus on what we can do better, building a stable, telecommunication service, ensuring that we move our customers from 2G to 3G to 4G, ensuring that there is coverage across all the country. That's what telco people know. That's their job. That's what they want to continue to focus on. But spinning out their mobile money division to, okay, you that know how to run banking, you that know how to run finance, you that you're focused on what's called fraud detection for financial services. You that know how to do all of that kind of things. Well, come and run the payment system, and then we'll figure out how that works.
Somebody asked a question here. It's an interesting question on the Tech Friday edition of Business Express. Timothy says, please, could you or anyone be kind enough to share more on fintech? I heard someone discuss it and Googled it, but still do not understand what it's about. Timothy, my simple question to you is, do you use a banking app? Do you send money via your app or through your app or through USSD transactions? That's you using financial technology. That's what it means. Fintech is financial technology. Sometimes you
Simply.
overlook these rudimentary or fundamental definitions. Yeah.
Yes. So I mean, simply it's financial technology, right? So but of course, of course, we have been having conversation around, okay, should it be fintech, or is finance that comes first or technology that comes first, right? So there are conversations about that. But like Valentine said, it's simple, electronic payments that you don't have to carry cash from here to my big to send to move money to the person. Same as you're using financial technology. I mean, you're using the technology infrastructure to support finance. So that's essentially what it is. But of course, because we've seen people that are younger leveraging technology better, right? They try to monopolize the word, right? So essentially, if you're building the digital bank, you're considered more a fintech than me using GT Bank with my internet banking, access, and of course mobile app, all of that. So it's just what the differences are, but the basics is that, technology for financial services essentially.
Yeah, speaking of banks, now still going back to the mobile money conversation, which Nigeria, I mean, with how you see that Nigeria's bank-led financial inclusion, drive or strategy is going on, is there room for mobile money to grow in that sense?
Sorry, I didn't hear that. Sorry.
I said with Nigeria's bank-led financial inclusion strategy, is there room? Do you think there's room for mobile money to grow here?
Okay. So the fact that mobile money is led by banks in Nigeria has own limitations specifically, right? I mean, just about 2 months ago, we still heard about the banks and telcos fighting about how to split the revenues on USSD type transactions. So just kind of, issues will continue to happen. You don't want telcos to leave financial services, but you want to be using their network to be recharging your or reach bank customers. Like, no, I'm not. You have to pay me heavily for that. So that's what is happening, right? So it no doubt would drag growth. It would reduce the growth levels because banks, traditional banks are used to doing traditional stuff. Telcos have built network of over 100 million users today. Banks have not been able to build network of more than 40 million people today, right? So, and then banking has started even in 19, whatever it is, right? So, but telco really just started in the past maybe 10 or less than 15 years ago, essentially in Nigeria. So, so yes, I think it's going to drag the wheel of growth for mobile money adoption and of course financial inclusion across Africa if it continue to be bank led.
Yeah, you're listening to Business Express 981 here on Smooth 98.1. My name is Valentine Ohu. My special guest analyst is Fisayo Durojaye, business analyst and professional there in that field. There's a message from Rainmaker. It says, for mobile money in the last decade rather, it's been a theme in emerging markets from Southeast Asia and of recent North and South African nations, and it's been largely driven by telcos. Telcos are the only players in the tech space that go to the nukes of these spaces, and largely where the unbanked and undeserved or underserved are. But don't doubt the influence of the oligarch that run our banking space. They won't take this lying down. See why deposit money banks have switched up this POS agency drive to include some form of financial inclusion, open accounts, and all. I remember recently, just a few days ago, CBN said that they were going to partner with these guys, the Bits.Inc., those guys that help them, set up the e-Naira thing, that they're going to build an app to, help those who are unbanked to extend that financial inclusion in that space. But
makes no sense. Build an app to help people that are financially included. Really?
I'm telling you,
it doesn't make any sense.
I was trying to understand because I'm like, first, you understand. First, you say that yes, e-Naira is for those who have bank accounts already, but we have existing digital banks who are providing these services and making it possible for people to open accounts within 2 minutes, right? So if they can transfer money or you can make transactions without handling hard cash, how about making it possible for these banks to continue carrying on this service and extend it to the unbanked?
Essentially, right? And of course, even there is no product market fit there, because if you're saying someone is unbanked, it means that to a large extent, it might not have a smartphone, it might not have all of this. If you're not building a mobile app for someone that is unbanked. I mean, if you have a smartphone and you can use an app, why are you unbanked? It doesn't make sense that you are unbanked, that if you have all of these resources to you. A lot of times people are unbanked because they don't have the resources, they don't have banks near them, they don't have the infrastructure to have. But if you can use a smartphone and you can download an app, then you have
you can
all
set
the
up an account.
Do you get to mean you have data? You have to be buying data from telcos. You have to have some form of internet connection or connectivity. So why don't you have a bank account, right? And of course, it's easier to do that by downloading other apps. So why do I need to create a new app for people that are unbanked? It doesn't just make any sense, right? But anyways.
Anyway, speaking of financial inclusion, Fisayo, I want to ask your thoughts on this World Bank reports showing Nigerian banks closed 234 branches and 649 ATMs in 2020. What do you make of that?
It's mixed feelings because for banking, right, branch network is typically a drag on operation expenses. Okay, so a few things happened. There's some consolidation. Access Bank, Diamond Bank. So there'll be branch of optimization. That might have, drag that up. So it means that on the streets where there used to be one Access Bank opposite a Diamond Bank, now that the two of them are together, they have to close down one so that only one operates. So some of those things will definitely happen, right? And then of course, so essentially, if you close down the branch, it means that you close down the ATM in those branches too. So those two things are linked, right? So that's it, right? One other thing I've also noticed that we've noticed is that branch networks, a large extent, are dragged on the bank's operational expenses or operations, because maintaining a branch, Valentine, maintaining a branch is
it's hard. It's a lot. It costs a lot of money. Okay, saying that really. To be honest, Fisayo, thank you so much. I'd like to especially thank you and appreciate you for being present here all through this time, especially now. Are you there? Can you hear me?
Yes, I can hear you.
Go on. You said maintaining a branch costs a lot of money.
Yes, so maintaining a branch costs a lot of money. So that's one of the biggest problems. So it means that the banks want to optimize the money they're spending on those branch networks, right? So, and I think that's one of the other critical things that we need to consider when thinking about branch optimization as we know it, right? So now that technology is readily available, right? A lot of banking services, the things we are typically going to do in the banks or in the bank branches, are no longer essential. So it means that people can have access to all of these activities from their mobile apps, by calling someone, by not physically going there. Then, of course, the branches become less important. And I think that it's probably, a step in the right direction, I guess.
I guess the step in the right direction is right. Thank you so much, Fisayo. Thank you for this. Fisayo can be contacted on social media. Fisayo, what's that handle again?
Are we allowed to mention Twitter?
Go ahead.